And now we will proceed to our panel number 2, which is devoted to capital markets. I would like to pass the stage to Attila Koksal, who has many positions. First of all, for me, he is a great supporter of Ukraine because he is a frequent attendee of and participant as a speaker of annual CFA forums. Numerous of them he visited and contributed. Also, Attila is a former board member of the Board of Governors of CFA Institute, and now he is a board member of Ünlü Securities, which is one of the leading Turkey investment firms. So I'm more than happy to pass the stage to Attila, and Attila will present the panel. Attila, please, the floor is yours.
Thank you, Alexander. Well, it's a great pleasure to be here, ladies and gentlemen. And I cannot believe that this is the 8th investment forum already. Because first time I was here was 10 years, maybe even 11 years ago. And I was a volunteer of CFA Institute. I was the so-called President's Council representative, sort of overseeing the relations of CFA Institute with societies in EMEA East. And I was invited here by Andriy Klimchuk because he was setting up the society here with a group of volunteers. And I came here and saw this amazing group of people. And since then, I think CFA Ukraine Society has been a success story. Starting with Andriy, then Andriy Bespiatov, and Yevhen now, and many other volunteers. I mean, you have an amazing group of volunteers. And this event shows that really they are performing very well. So I know that we stand between you and lunch, so we'll try to be, finish on time, even though we started a little late. And we have a great group of speakers. I think we have combined more than 2 centuries of knowledge and experience in capital markets, and investment research, and governance, venture capital, advisory. Not that the speakers are old, but they are experienced. So, and I'll call them, but before I call them, I understand we have to run another survey. Okay. So, can we please put up the questions so that we can start voting? Okay, before we start, please. Okay, these are the questions that we'll be voting on. What would be the best course of action for authorities as regards to Ukrainian capital markets? So these are the topics that we'll be discussing in our panel. So please read them and answer them. So this is better organized than the previous one. So A, B, C, D, we have them all. So please make sure that you all vote, and we'll start our panel. We are done? Okay, thank you very much. So let me call the speakers. I won't introduce them one by one. You have their, shall we show the results? Wow, okay. Okay, wow, okay, there's a big consensus here. So full liberalization of capital flows and integration into global markets is by far the choice of this group. I think we are done now, right? So 2/3 of the group pretty much agrees on that. So I won't read the bios of the speakers. You have them all here. They are, as I said, and as also Alexander mentioned, they are a great group of speakers with lots of experience. So I'll invite them one by one. Gary Baker, CFA. Gary? Oh, okay. And Dmitry Anufriev. Dmitry? Yes. I think. Timur Kromaev, Brian Best, and Salim Chowdhury, last but not least, the venture capitalist. And I'll go to my seat. So before we start, if we can show the questions here, the questions we just voted on, I'll also ask your opinion one by one. Which one you would choose is your choice. Can we please put up the questions here? Dimitri, I'll start with you.
Hello. Well, my choice was trying to rebuild local stock market. If I could rephrase it, I could say trying to create local stock market. And I believe that although liberalization is also important, full liberalization would be dangerous because we have just started as an economy to stabilize, and there is a danger that full liberalization could lead to just the risk of money escaping the country quickly. So therefore, trying to build local market is my preferred choice here. And I believe this is important because our neighbors in developing countries, including Poland, Czech Republic, Russia, and others, to say nothing of developed markets, they have much better developed stock market. The value of stocks traded there is dozens of times higher in terms of percentages to GDP compared to Ukraine. And I believe this is a really important source of capital for companies and an important element of economy and important contributor to economic growth. So that's why stock market is my choice.
Thank you. Timur?
Well, my choice would be the first one, because liberalization and integration in the global markets is impossible without the local market, the capital market. That's, if you can tell me any country with a free liberal regime without a capital market, please make a hit. Yeah, take a swing. I bet you won't find one. At least, okay, if there won't be a highly developed capital market, you will see, to a certain extent, strong financial institutions. And that's regardless of its size. So it's definitely integration, applying the same rules that currently exist in the post-crisis financial market. We see that MiFID is coming into force in January. So I think Ukraine should take upon those rules immediately and integrate and liberalize its currency regime with the development of the capital market. That's key. Thank you.
Gary?
Yeah, I'm all in favor of number one. Totally. I mean, that's been my background. I think I've worked in a lot of developing markets, developed markets, and the route to development and success has generally been integration, liberalization. I think certainly the experience has been mixed. You've got to be sensible as to how you liberalize. There is a way of doing it, and I think a lot of what we talked about on the first panel gets to some of the steps that need to happen first or at the same time. You can't just throw open the doors and not have good corporate governance, transparency, rule of law. You know, all of those are necessary, but the aim here is to integrate and really hold everyone, yourself, your standards to what is best practice wherever you are. So I think number one is certainly my choice.
Thank you. Brian?
Timur, I almost fell out of my chair when I heard you say number one. Being from the SEC, I thought that number two would be your first choice, and you redeemed yourself. Thank you. Yeah, I agree with Timur. I think that Ukraine has to have its own capital market. I think that it goes hand in hand with number one, though. First, have a good, strong local capital market, which brings the things that Gary just mentioned, things like corporate governance, transparency, and institutions, et cetera, that support capital markets, but then liberalize and allow money to flow. So I would have chosen number two, but with an eye to number one as a close second.
Salim?
I can only echo Brian's statements, but the reality is that I think this would be great if we were having this conversation 10 years ago. I just think it's kind of, as the Silicon Valley venture type here, unsurprisingly, I think it's all kind of moot, because the reality is decentralized organizations and institutions will take over in economies like this unless the governments and the infrastructure get to a point where they can be trusted. So this is actually a moot conversation.
Thank you. So I'll start with you, Salim.
Yep.
The first question goes to you. How is the modern investment industry changing along with new technologies? And what opportunities or challenges does this create for developing markets like Ukraine? And will the new technologies change or disrupt traditional ways to raise capital publicly by companies?
Oh, wow. Okay. So we've got a lot of questions here. But one is the impact of technology, and the other is on public raising. So I'll address them hand in hand. I think Ukraine is in a phenomenal position from a technology point of view. Famously, Ukrainian software engineering is world-class. Famously, the discipline and the rigor by which these products are engineered is something that Ukraine is famous for. So from an ability of can this country take advantage of it, it bloody well should. If it doesn't take advantage of it, it's missing an opportunity. And that's why VCs like myself come here. So there's that point. Also, a second point around that is that the technological leap is only going to be, it actually empowers smaller countries over larger ones. Because the ability to create the body of data, the ability to make the decisions, etc., with advances in AI, advances in machine learning, etc., these were previously just held, the ability to make your own decisions based on large data sets were only held in large financial markets, such as New York and London. But the fact is, data is more open. The technology to analyze this is actually getting more and more distributed. So it creates a much more even footing for countries like this. It does have cities like my hometown of London scared to a certain degree. But that, to me, is the opportunity. Can you take the technological brilliance and can you actually apply it in a way that gives your financial professionals the same level of knowledge and insight to be able to compete on the global scale? The second part of your question was actually much more, was something I find fascinating. I spend my days investing in illiquid companies. Liquidity in early stage startups is this thing that we have no idea of, right? The idea of a fund exiting clean, it's just like, it's the dream, it never happens. So the things that are really exciting for me is the decentralization of it all, the rise of the ICO, particularly in countries where people don't have faith yet in the public markets for listing. And that, to me, certainly for the early stage and even for the later stage, will become more and more of a common occurrence. If you don't trust your governments and you don't feel safe with the currency and the stability of the market environment, you are going to pick a decentralized route seems more stable. The thing that I find fascinating, I was speaking to a colleague in Israel quite recently. He was saying how he had, he loves his country. Like most Israelis, he's very proudly patriotic, but he doesn't trust the government to manage his pension funds. He doesn't trust the pension advisors there. He trusts Bitcoin, mostly because, or blockchain, or these wonders of digital cryptocurrencies. He's fundamentally, look, there's more regulation on those and better governance and transparent governance on those that I can see and I can believe in. And so this is what makes it difficult. We've got these new standards being set. And so I don't believe that it's a winner-take-all solution, but good God, cryptocurrency is forcing governments to, if you look at the open standards by which things like Ethereum are governed and managed and how open they are, you'll find very few public markets who are as transparent in emerging economies.
Thank you, Salim. We'll also touch the trust issue later on, but I totally agree with you. I'm from Turkey, and we have the same problem in Turkey.
My colleagues in Turkey complain exactly the same. We have a very active fund in Turkey, and yeah, there's a huge interest there.
That's right. Gary, would you like to comment on this also, please?
Yeah, I mean, you can approach this at so many different levels. I think, yeah, maybe I've got a couple of points to make. One is, I think clearly there's a lot of talk about pace of change, disruption, ripping up business models, but let's be clear, that's always been the case in finance, always. I started in finance 1986. My first job was inputting manually TSB allotment letter numbers into a ledger. I mean, that was about as manual as you could get. So fintech to me is any improvement on that, and that stretches from systems, payment systems, processing, security of transactions. What's remarkable though, you bring that up to date, and yes, I totally agree, there are some fundamental changes, I think, in some of the open source processes and systems that we're seeing. But what's been remarkable is how tenacious the old system has been on retaining its involvement in the process. Intermediaries are still there. If you look at the deepest capital markets we have in the US, you've still got investment banks intervening within the process of raising capital and charging lavish sums of money to do so. Now that doesn't work. I mean, why is that still the case? On one hand, you'd say, well, if it's still the case, then it must suggest that they still provide some value because it's an open system. Why is it still in existence? Why is this underwriting system still in existence? Why not this direct auction system that has been tried occasionally but has never really got off the ground? But that clearly is one area, I think, that is still to change. The benefit for Ukraine and a lot of more emergent or rebuilding economies is that legacy baggage is not there. It's not necessary that you've got to deal with the current process. I think the last speaker mentioned just how much is being spent on current legacy systems rather than new build, looking forward systems. And that's the reality of it. It's remarkable how the dominant ethos clings to power, but that gives opportunity. You shouldn't be worried about that. Change is a given. Over 30 years, I've seen, I don't know, let's say 20 crises, which were potentially world-ending, career-ending, financial market-ending. But if you adapt, adopt, are prepared to change and look for where opportunities are, it's all there. And technology is certainly giving us that capability now. So I'm pretty optimistic about where that future lies. I don't think it's easy to say, these are the steps, these are the skills. So you've just got to be flexible about it and be open to where those new ideas are coming from, because they will be with us. And I think that's the excitement for everyone in the audience.
Thank you, Gary. My second question will go to Brian. I am an investment banker from Turkey, another emerging market country, in certain ways similar to Ukraine. In certain ways we are different, but we work for similar companies. We are both market leaders in our country, but of course our country's investment banking universe is not that large. So we really struggle certain years, but certain years are quite good. As I said, this is my, I think, 6th or 7th visit to Ukraine, and I attended a number of these conferences. I was here in 2013, 14, and 15, in the worst of times. And now I see, of course, this is a foreigner's anecdotal observation, but I see a much better mood here, and looks like things are going for the better. So my question to you will be, how do you see the investment banking environment here developing, and what's the future outlook? Please.
Well, I can tell you that so far this conversation has just made me feel really old. When we were sitting outside the room, we were talking about amongst ourselves our biographies. and I started to feel a little bit nostalgic because when I started in this industry out of university in the early 90s, I worked for one of the large global investment banks, but I worked in their San Francisco office. And so I had to get up in the morning at 6 o'clock and be in the office because the market opened at 9 o'clock in New York, and we had to be there when the market opened. So I would get up in my little apartment, and I would walk outside. It was still dark, and I would walk to work. And I remember walking through this market every morning, and everybody was getting ready for the day, and there was this artesian bakery that would be baking these like amazing croissants and danishes and things, and the smell was just intoxicating. I'd walk by there every morning. The problem is that they didn't open until 8 o'clock. And so all I could really do is just smell the croissants. I could never actually taste them. And that's actually kind of how I feel about Ukraine for the past 20 years. We can smell the potential here for success. We really can. We just haven't been able to taste it yet, and I'm getting really hungry. It's been a long time. To answer your question, though, Attila, I mean, in my view, the Ukrainian investment banking industry is still in its infancy. It's not because of the fault of the investment banks. In my view, it's because of the weakness of the local capital markets. I mean, really, capital market development requires four things. It requires sound macroeconomic environment. It requires a solid banking system. It requires a proper institutional framework to support the capital markets. And it requires a certain level of supervision and regulation. I don't think that in the entire existence of this country that Ukraine has had all four of those ingredients at any given time. And that is the problem. We have, in the last couple of years, we've seen some improvements, certainly. We've seen improvements in macroeconomic stability. We had growth last year of just over 2%. This year we'll have just over 2%. Next year we'll have, a little over 3%, hopefully GDP growth. That's not where it should be, but at least we see stability. We've cleaned up the banking system to a large extent, and that's obviously good. But we still lack the institutional framework for a proper functioning capital market. And we don't yet have, and we haven't given people like Timur and the Securities and Exchange Commission the ability to properly regulate and supervise what's happening in the local capital market. So the trust in the system is just not there, and so a lot of investors are still at bay. They're still not flooding to this country to make investments. So where do companies go? They go outside of Ukraine, and the problem there is that not many Ukrainian companies can afford to go out and raise a $300 million Eurobond. They can't afford to do a $100 million IPO on a foreign market. So until something here changes, the investment banking market will continue to focus on things like M&A. It will continue to focus on debt restructurings, and we'll do the occasional capital raise through a private placement or such. And then, of course, participate where we can for those few companies that can do the international listings. But we would like to be able to do that here in Ukraine.
Following up on your analogy of the bakery analogy, in Turkey, we also smell the bakeries, the croissants and what have you. And certain years we eat a lot of them, which is great. But then you have to wait many years to smell them again and get to eat them. I don't know which one is better or worse, but our markets are really extremely volatile. But we've been lucky in a sense that, until 2000, Turkey had 30 years of high inflation period. And by high I mean high. We had 50, 60, 70, 80% inflation through all these years, averaging 50% or even 55% overall. So no other country experienced that. But then in the year 2000, we had a major banking crisis. 1/3 of the Turkish banks failed. And we had a government change. And the government turned out to be very reform-oriented. And also the global environment, the global economic environment helped us. So for 15 years, we had a great run. So our investment banking businesses flourished and our stock market expanded. But now we started doing the wrong things again, so we are now going sort of downhill. But that European Union anchor really helped us, along with the global environment. And we had the opportunity of building our capital markets. So maybe Ukraine is at a turning point like that. Of course, the global environment is not similar. It won't be as great, but again, also globally, things are probably turning. So let's see if we'll experience that here also. Dimitri, would you like to comment on this?
Yes, sure. I started to deal actively with investment banks as a senior manager and then a partner at Deloitte in 2006, which is 11 years ago. And back then, the investment banking industry seemed to be flourishing. Many of us wanted to become investment bankers as well. It was kind of a dream career, and we got offers, etc. So it was a very interesting period of time, which was followed then subsequently by more challenging period when a number of banks left during 2009, 2013. Now we have even more challenging period, in my view, for investment banks. But still, the industry survives, in my view, and I hear from my friends at investment banks that they still have a niche. Many of them are successful in supporting and advising on special situations deals, including complex debt restructuring deals, distressed M&A, and just normal M&A. So I do agree with Brian that the industry yet has to grow and develop, and basically the real industry is still yet to be formed. But I believe that there are some niches where investment banks, local investment banks, they are successful, and I hope that there will be a much better time in future for the investment banks in Ukraine.
So my next question will be directed to Timur, but I'd like to give a few numbers before that. The daily stock turnover, average turnover, I understand, is around $200,000 per day in Ukraine, which is very small for such a big country. And also there haven't been any local IPOs, and most of the stocks trade either in Warsaw or London, like they trade abroad. And my question to you would be, what should be the reform priorities on local capital markets? Should Ukraine continue trying to rebuild local stock exchange, or just go for complete liberalization of capital flows? Does it make sense to maintain restriction on capital flows when modern technologies do not see national borders? It's a long question. But
Thank you for one very long question with so many potential answers. So let me just start about the size of the stock market and how it's relevant to the current conditions. I think Brian said it well, that we haven't seen the market yet. It hasn't been open. It hasn't provided us with anything yet. Why? Because till at least 2014, we haven't seen any strong society formed in Ukraine. There hasn't been a strong social network that would promote public markets, that would treat information and responsibility to the extent that people would start contributing and putting their money, into something that they believe in. Unfortunately, we've been living in the country that has been pretty much private. It's been, after the collapses of the Soviet Union, we had no rules, we had no trust, so everybody went, to their own houses and thought, they live in a fortress. We know where we are now. So without public trust, without strong social demand, we won't build a capital market. So why I'm very determined and very optimistic, because in the last 3 years I see that society is forming. On the other hand, I see that it won't be an easy way forward for the development of the capital market, but I think it's still a very incentivizing feeling. So how should we proceed? We see, as I started, we see full integration into the global markets on the same rules, on the same basis. Transparency, responsibility, strong financial contracts, that's what builds the markets. And Ukraine should not invent its own bicycle here. That's, once and for all. So to me, the current liquidity in the market is in terms of the volume, it's quite irrelevant. What we're trying to say is that, look at the OTC market. It's a horror. The market is fraudulent by nature. It's used to avoid taxes, launder the money, and who else, what you can do. So until we, can live and think that this is okay, there won't be any capital markets. And we need powers, we need authority to take over this mess. Because if you have people who are coming to the market for different reasons than you, sorry, you're not going to succeed. No matter how smart are you, how sophisticated you are, and how many bitcoins you bought 9 years ago, you're going to be bust, and that's for sure. Technology, and I agree with Salim that Ukraine is in the great condition of a backseat viewer, and we can take the technological solutions. But what I don't believe in is that technology will solve a human relationship issue. Trust, desire to take advantage of somebody, that will always be, and that's what makes me comfortable that regulators' work will be forever. And I think you also you're not able, to build the respect to the new technology if you're basing your marketing on the philosophy that you're setting somebody against somebody. You don't set against the government, saying the government has problems and I have a solution. There's no. Unless we challenge the problems with the government with a clear-cut solutions, we then will focus on how we can use Bitcoin or the other, digital assets in the new markets. But I think it's, these things are parallel. So, please tell me what I missed from that long question.
No, that's great. I mean, touching on the trust issue, again, I keep making analogies with Turkey, but that's all I know. So coming to Turkey, we have a big trust issue in Turkey as well. I mean, people invest all short term, like the biggest investment is into 1 month bank deposits. But we still have a well-functioning stock market. And 2/3 of the free float is held by foreign investors, and only 1/3 is held by locals. But locals account for almost 80% of the daily trading. So they buy and sell. Of course, they hold the stocks for a short term, so they churn the stocks, but they give enormous liquidity to the market. So that brings, that's a big advantage for foreigners too. So they see that there is liquidity in the market, so they are more comfortable holding these big chunks of shares in their portfolios. So it's a chicken or egg story. So how do you create the liquidity?
The liquidity.
Yeah.
Well, my personal view, it's not the view of the regulator. My personal view, it's not about the equities. Sorry, in this macroeconomic landscape, you cannot build a sustainable equity market right away. It's not going to be a first asset that I would invest in. I think it's, first of all, it's fixed income. It's a commodity market. and futures and options in the commodity market. That's what we need, and that's what Ukraine needs. There is a liquidity there. Ukraine possesses quite a sophisticated and advanced commodity markets. Let's not try to pretend that we are already a Silicon Valley. I mean, we have in front of us liquidity, and we're ignoring it, letting it go into the OTC fully. You know, in fact, we're not even able to form our own price on the commodity where we dominate. That's, I think, it's a big disgrace to the financial guys. I mean, look, guys, we're not able to give the instruments to the agrarians they need. You know, shame on you, I think. Yeah? So equity will follow, and equity will be a great cherry on this pie. And I think it's, let's say, if we proceed, you know, the way we move, maybe in 5 years we have an IPO. And,
Salim,
I
Brian?
hope, you know, we get to that 200 years of our experience, another 5. Come on, it's not much. Yeah?
Sure.
From that respect, it's not much.
Would anybody else from the panel comment on this?
Before we joined today, I wrote down some numbers because I thought it was interesting. You said that Ukraine has about $200,000 a day in turnover. I think it's on average a little bit less than that, about $100,000, $150,000, which is laughable, really. Just to put things into perspective a little bit, Poland's GDP in 2016 was $469 billion. Its stock market capitalization was $138 billion. Hungary's GDP was $124 billion. Its stock market capitalization was $29 billion. Romania, $186 billion GDP, stock market capitalization $34 billion. Slovakia, $89 billion GDP, stock market capitalization $49 billion. Ukraine, $93 billion GDP, $4.5 billion capitalization. It is unfortunate there is no capital market here. But I would disagree that Ukraine won't have one. It needs to have one because, Timur, you said it right in the very beginning that you look at any successful economy, especially in the region, they all have a successful capital market, a capital market that works. And I think that it's important for Ukraine to have a working stock market and a proper functioning capital market, because what it does is it mobilizes the domestic savings, the money that people are putting now, you see, into real estate. They're putting money into, these buildings. I don't even know, I go by them every night and I look and see how many lights are on in these buildings that are being erected around the city, and it's 1 or 2. It's incredible that this money is going there and not going to the stock market. I know what you're going to say.
You don't have to persuade us. I think I'm delivered.
And it's not only the Ukraine that has the problem. Ukraine that has a problem. We have the same problem in central London, so it's not a universal problem. We've got one of the world's most liquid markets on planet Earth.
Right. But what you have in the UK and what you don't have here is you have the mobilization of savings, and those savings improve when people invest them in the market. What it does is it improves the asset allocation. That increases investment, increases growth, and ultimately increases prosperity. So this is something that Ukraine needs to have. The question is how to do it.
Yep.
And what we missed, I think, in this country was the mass privatization that we saw in Central and Eastern European countries that didn't really happen here. You know how many companies actively trade on the Ukrainian stock market? 2.5. Do you know how many retail investors there are in the Ukrainian market? Anybody have a guess?
A couple of hundred.
0. 0. I mean, come on. The trade's 0. So how do you go about building a capital market? I mean, I think that there are a couple ways to skin the cat, as we say. You could, how many state-owned enterprises do we have now? Over 3,000, 5,000? 5,000, 3,000? 3,000, okay, what doesn't matter, it's a lot. Those could still be privatized. And I understand the argument against it. The argument against it is that the government needs capital now. And if you sell the companies on the stock market, you're not going to maximize their value. I understand that. But If you privatize them using the stock market, what you do is you create a capital market that then in future years creates growth, creates a macroeconomic locomotive that will then benefit society and Ukraine as a whole. So I'm all for mass privatization. Whether you do that by privatizing all these companies on the local stock market, or you put them into a fund like Romania did and let a fund manager like, who does it, Templeton? I think Templeton manages a fund for Romania. It all has the same effect. It builds a local capital market.
Thank you. Thank you, Brian. One last quick comment. Do you have anything to add, or I'll go to the next question?
The only thing I think was really interesting is that we are in an age where, for the first time ever, we have competition for ability to list companies through technology. And what I think is really, really exciting is if you look at countries that are really grabbing the bull by the horns, like take Singapore, even the UK's FCA, waving my little patriotic flag there. The reality is that they are looking very hard and very fast at the emerging technology space for IPOs and different ways of doing it, and they're like, how do we compete with that? And this is what's really exciting. For the first time ever, it's no longer the Ukraine competing with Warsaw or London for IPOs. It's that we actually have multiple alternatives now. And for me, it's a big challenge of how do countries like Ukraine think about how to structure to make it even more appealing than the array of technologically enabled stuff. And it's an amazing challenge, but one that I believe countries like yours can totally take advantage of and totally win in the space if they are forward-thinking enough. Be bold, please. We don't see enough bold. That's the thing that scares me about like a lot of this part of the world, is that the regulators could be so much bolder. And this is something I'd love to ask. Why? Why does it come across as being so timid?
Well, I think we're very bold. If you ask anybody around, this country, I think you can say that financial regulators are very bold. Law enforcement are not.
Ah, okay.
Yeah. I think, we've had this discussion with the financial authorities, with the central bank, with the Ministry of Finance, about how you treat, for instance, Bitcoin. Obviously, we all, of course, this is a financial more or less, and obviously it's not competing with the currency stuff. But law enforcement, they see it as an opportunity because it hasn't been clarified in the legal framework of the country. And they obviously question that, and people suffer. So I think we need to be, we're very bold. Now we're trying to initiate the discussion. Let's look at these assets from a principle standpoint. Yeah, it's a principle-based, issue. It's not about just the uniqueness of a certain crypto code and stuff like that. But we would be happy to do this. Unfortunately, over the 20 years, we've been writing laws like a manuals. You see, if it's a manual to drive a car, you cannot fly it. You see, it's a technology sensitive legislature. Even if we would like to have recognize either one of the ICOs in Ukraine as a public offering, I'm not able to do this. I would like to have a judgment and have a responsibility over this. Please, take me to court if you don't believe it. But if I believe, I would like to recognize this.
No one.
So, but we, our hands are tied and our feet as well. And you're trying to tell us to run, sprints. It's tough.
Okay.
So what we're trying to do is obviously initiate and change the financial legislature to take the technology as a tool, as an instrument, and use it for the benefit. So we're looking right now at the potentially, setting the rules for the crowdfunding in Ukraine, because we firmly believe that it's going to start from a small amounts of raising capital. And we need to offer people different solutions. I believe the access to market is not only for rich and prosperous people. We need this instrument to a wider community, but we need to protect them. We have very bad situation with forex dealers, with you know, other stuff that is sold, you know, to people who are not protected. And people, you know, those who do it, they sell it like, you know, you have an access to a big club. And that person believes it.
Got it.
And I think this is a huge factor that will continue you know, this mistrust.
And that's, I think you hit the nail on the head. It's like people don't know where to trust. Why are people buying houses? Because they can't trust the markets.
Right.
And I think we as an industry need to look towards that. I'll be talking
We'll
more
come-
about that in my workshop if anybody's interested.
Okay. We'll come to trust in a minute. Now I'll ask a question to Dimitri, because we've been talking about foreign investor issues, and also you had a view on private equity. So do you see increasing foreign investor appetite to Ukrainian assets? And what can be the successful ways to attract capital to Ukraine?
Short answer is yes, we do. And the long answer is, during the last year, a number of important positive developments happened in Ukraine, including the fact that the GDP revived growth, macroeconomic stabilization happened, including foreign exchange stabilization. Thanks God we have no escalation of military crisis in Donbass, and some of the reforms were, we can say, successful. So obviously we are continuing cooperation with the IMF, and all that already reflected in some good deals, including, as you all know, 2 months ago, successful return of Ukraine to international capital markets, raising $3 billion. Some of the blue chips raised debt as well, including Kernel and MHP. And yes, we are seeing interest from foreign investors in Ukrainian assets in terms of private deals. We are talking to investors quite intensively, especially during the last 11 months. So before that, there was a 3-year period of almost no interest from foreign investors into Ukrainian companies, while during the last 11 months, we do see interest in assets in, obviously, IT, energy sector, infrastructure, real estate, some interest, some remaining interest in the banking sector, obviously food and agro sector. And this relates to a number of groups of foreign investors. This relates to European strategic investors. This relates to private equity houses of mid-size. There is interest from China, some interest from US. So quite a number of groups of investors, including foreign banks, which are contemplating financing M&A deals where Ukrainian investors are involved. So I would say that the trend is positive, but obviously the interest itself in the absolute terms is still restrained compared to where we were years ago. And what is also important is that although there is interest, which is increasing, the approach that the foreign investors are taking is very cautious. They are very cautious because of the risks involved and because of the obstacles which we have been discussing for a number of years. We all know these obstacles. And Dragon Capital, together with EBA, made a very good survey just a couple of months ago, where the obstacles to investing in Ukraine were reconfirmed once again, and the key of them remain to be corruption together with the inefficient judicial system, but also there are many others, such as stability of financial system and foreign exchange, such as tax system, controlling authorities and actions from them, such as military conflict, of course, still remains to be one of the issues. And the power of oligarchs was also mentioned as an important obstacle. So obviously, resolving these obstacles will significantly increase the interest. In terms of the ways to attract capital, how I see it, I see it as a phased solution. And phase number one would be to, first of all, restructure existing debt, because over 60% of Ukrainian banking system consists of non-performing loans, which means the existing debt of the Ukrainian companies is basically not possible to sustain. So issue one is restructure existing debt. Within that phase number one, I think that the most important element to attract capital is deals with strategic investors from foreign countries, especially from Europe, and also private equities, as you mentioned, Attila. So I think equity through private deals, strategics as well as private equity, is number one source of capital. And obviously within that phase, important role will still be played, I believe, by international financial institutions such as EBRD, IFC, and others. They are very important source of capital as well at this phase. Then we could consider expanding leverage and attracting more debt from banks, both Ukrainian as well as international banks, including as well debt from IFIs. And only then we can think of, in my view, of really capital market deals, both debt as well as equity deals. Not only for just blue chips like today, but for a wider circle of companies.
Yeah, private equity is quite important. Like again, in Turkey, we got a lot of private equity inflow during between 2005 and 2015. It's somewhat slowed down now, but we got billions of dollars in. And now next year, early next year, we have 5 IPOs coming to the market. Each private equity exits, all of them, and they are in the range of $500 billion to $1 billion. This is the IPO size. This is amazing. I mean, we've never seen anything like it. And we are not even sure if the market can handle it, if somewhat things go for the worse. But that's also another great opportunity to expand your equity market, just like privatization. Of course, again, you have the chicken or egg story. You need trust. These companies have to trust that they can do the IPO and come to the market. And investors also have to trust to buy these companies. But these are relatively good companies. And private equities are exiting because they have to exit. It's not that they are bad companies or anything. So it's a great tool, I believe, to really give boost to your local capital markets, the private equity exits. Now coming to the trust issue, and so obviously I'll start with Gary on this, with CFA Institute talking so much about trust. Is trust in the asset management industry still a human-related factor, or are new technologies changing it? How critical is the proper qualification level of asset managers and investors as a trust factor?
It's interesting. I mean, trust is everything. I mean, what I said in the opening comments this morning, I really strongly believe, I was very taken by the comments on development in society as well. You know, as an industry, we need permission from society to operate. You've got to be seen to be doing something for society for that mutuality of interest to take place. And trust lies at the heart of it. And trust, you can borrow trust initially, and training, credentialing, education, reputation, they all help in that process. But ultimately, trust has to lead to results and outcomes. And people have to feel that they're getting something from committing trust to it. And I think that's one thing that we try and talk a lot about within CFA, that we ask a lot of people when they take the CFA program to learn this huge body of knowledge and apply it and think about it and spend time being examined on it. But the point is, that's just the start of the process. Fine, if you've got your CFA, it's great, congratulations, but that is just the start then of a commitment to actually utilizing it. And what I mean by that is acting in the best interests of clients. It's really committing to staying on top of what your knowledge is, your ethical decision making. It's not the end of it. You don't just get the CFA and qualify and that's it. I'm done for life. That's me. I've already shown that I can do this. It's the start of a process. It's committing to that financial community, that local society, that you will be an active participant within it to help the overall development of that society. Because it's only if that happens that really there is real value in what we do. It's no good just examining people and then saying, okay, off you go. We're not bothered what you do next. We want people to commit to ongoing ethical decision-making process and a commitment to that. So I think credentials are very important. I think that training aspect is massively important, that we get that right. And I know we're doing a lot of work on that in Ukraine, but that is, it's a means to an end, and the end is just ongoing participation and earning that trust. Yes, give it to me initially, but then it's up to me to earn it. And I've got to keep showing that the finance has got a useful function in society. And, and I think we can do that. Finance is absolutely fundamental to how society develops in so many ways. There is capital out there, there are ideas out there. Finance is that function that links those two together. And trust underpins it, but we can't take it for granted. We've just got to keep working at it continually.
Yeah, now we'll talk about the pension system. Timur, I'll direct the question to you. But again, to give an example from my little world, in Turkey, we started the auto-enrollment pension system this year. Our private pension system has been in place for more than 10 years, and it has grown relatively slowly at the beginning. Then the government started giving a 25%, top up, like whatever you invest in the first year, the government tops up 25%. And of course that gave a big boost to the private pension system. And they do the same thing for auto-enrollment, but just because it's obligatory and just because people don't have trust in the system, 60% of the people left during the first month because they were given a choice. So as an auto-enrollment system, it was supposed to be obligatory, but they had the choice of leaving the first month, or they would have stayed forever. So 60% of the people left. So now here, I understand the Pillar 2 pension system is being launched. And do you think Ukrainian market, is it ready for this? Do you have enough qualified people to manage these assets? And most importantly, where should these pension funds invest into? Only into Ukrainian assets, or should they invest globally?
Well, Attila, thank you for the question, but I think it's a little bit different. We haven't launched the second pillar, but there's been a decision by the parliament to launch it starting from January 1st, 2019. However, there's a significant gap and vacuum, and that's what we have been authorized to do with the government, to work out a real framework for the second pillar in order to make sure that we make it a scalable, workable, and sustainable to provide people with a proper pension later in the years. And obviously it's been just a general decision, and we're lacking the details, and that's what we need to do. It is important to take the experience of the other countries who've had the second pillar and third, and having it and using it. And there is a huge issue of, will we get the sustainable and proper pension? Will it cover our needs? Because it's not just poverty support. We need to make it big enough. And that's what I think many politicians didn't consider. They wanted to do it as an experiment. What we're saying, enough experimenting with us. Let's make it thoughtful and proper decision now, no matter how much time we need to spend. So I'm glad that we're having that chance. So I hope by mid next year we will propose relevant changes and contribution to the legislature to make sure that we start 2019 with a sustainable framework. It's another issue how fast it's going to start accumulating money, it's still a long shot. But what we need to make sure, as Gary said, we need to make sure that there is trust component. We need to make asset managers liable. They need to have proper experience, proper sophistication, proper tools, and responsibility to manage other people's money. That's what we don't have now. So we have a very short time to implement relevant requirements. Is the market ready? Well, you know, let's put the water in the swimming pool, and I'm sure we'll learn how to swim. Without it, it's impossible. We also, it's one of the other strategic venues that we're pushing forward is present the industry with all, you know, all the myriad of instruments, starting from equity, fixed income, asset-backed securities, derivatives of any kind, and make sure that we as a regulator can promote it and help to develop it in the right way, not to create any kind of bubbles. But you need to present market participants with all of the instruments, so they not try to use one of the others with some kind of funny ways. So I think if we make a systemic move forward and really initiating all of the changes in the proper way, I think the market will take off.
Hopefully. Thank you very much. So we'll give the word to the audience now. So let's get some questions. Maybe we limit it to 5 questions so that we are on time for lunch. So please raise your hand and please introduce yourself and point who you are asking the question.
Thank you for giving me the floor. My name is Andrei Kolnich. I'm representing DTEC company. We have been discussing investment banking
And who are you
services.
addressing your question to?
I will say in the end.
Okay.
We have been discussing equity, we have been discussing investment banking services, but we did not mention about fixed income. Timur has scarcely mentioned about fixed income. Thereby I have the practical question. Do you believe in the resurrection of local corporate bond market? As far as I remember, there have been no public placement of local bonds since 2011. What do you think about the public placement of, let's say, local corporate bonds within 6 or 9 months in volume of about, I don't know, $50 or $100 million in US equivalent? Who will be these investors, local guys or foreigners? What structures could be attractive for them? What should be the spread between the sovereign local bonds or Euro bonds? Because there were positive signs of successful placement of kernel MHP, sovereign Euro bonds. Are the foreign investors ready for investment in hryvnia without foreign currency protection? I would like to address these questions. I would like to hear 2 views, maybe one view from local guys, I mean, somebody who is willing to take the answer, maybe Dmitro, Timur, or Brian, and some view from guys outside of Ukraine, whether it is interesting option for foreign investors.
Brian.
Thank you for the question, and it's a very good question. In fact, somebody asked me that right outside. I think it was one of the journalists that's here asked me that question. I think it is coming. I think investors are starting to take interest in local currency bonds, and I'll tell you what we're seeing. First, you're seeing the investment that you're starting to see into Ukraine today is in the fixed income market, generally speaking. It's mostly large institutions investing in sovereign Euro bonds and also corporate Euro bonds. What's driving that are 2 of the ingredients that I mentioned early in my discussion, which is the macroeconomic stability and also the cleanup of the banking sector, which has given these investors some confidence in the market. But more importantly, they're seeking yield. And what we're seeing right now is this global search for yield. And Ukrainian sovereigns provided a really nice return on investment given the risk that those investors were taking. And again, I go back to those macroeconomic issues that I was talking about. So what we're seeing now is we're seeing the successful placement of OEGZ, the local sovereign bonds, and investors are starting to take notice. And the reason why is because the yield, I think, on those OEGZs are around 15% or 15.5%. So the spread between the hryvnia sovereign bond and the sovereign euro bond is somewhere about 900 basis points. That's a big spread. So if you believe that the currency of Ukraine is going to remain relatively stable for the next year or so, then that's a risk a lot of investors are willing to take. It hasn't happened yet, but I think that it's on the horizon. There's been a lot of new interest from investors to look at the sovereign local currency bonds, and I think then it's just a matter of time before the banks start issuing and the corporates start issuing as well.
Brian, my 2 cents on this is we've been very active in local currency bonds in Turkey. There, another issue is liquidity. So the liquidity premium ends up being so high because you have the currency risk, you have the company-specific risk, and on top of that, you have a totally illiquid market. So it's a buy and hold asset, basically. And investors are asking for like 200, even 300 basis points, if not higher, just for that risk. And that makes these bonds extremely expensive for issuers. And that's why, unless you have a big local demand that will take the currency risk at a lower premium and the credit risk at a lower premium, because they also ask for the liquidity premium, they become amazingly expensive and not rational to issue.
And that's exactly why those investors are on the sideline right now. We'll wait to see what happens with the sovereign local currency bonds. If they really start to trade actively, then we might see some liquidity in that market. But right now, it's not there.
If I may add, sorry, I'll put some more salt in this. We've seen this, very often. Come on, don't forget, we have 200 years of experience, right? Starting from 97, when Ukraine did the first its Eurobond issue, till now, we're still regarded as an exotic investment. Liquidity split, and we still haven't consolidated it. It's still local versus external. Local, it's only banks who invest. Yes, we're having new bonds issues, et cetera, et cetera. We haven't changed the legislature to ensure the bondholder protection, to make sure that they have similar rights to claim, and it's most likely they will have to claim, the money back. We also have external market. Interest is great, guys, but sorry, I don't stop here with interest. What's next? Next is that with this fragmented liquidity, we're going to have, and we attract only short-term investors. They will leave. They have no loyalty. Well, with all respect, we love all the investors and we treat them fairly. But we want to have long-term investors. We want to have portfolio investors. I'm also skeptical about external issues. Sorry, but my whole life, professional life, I've been issuing external bonds in the Ministry of Finance. And, I've been doing it, but sorry, I don't see a future about this. We need to make sure that we change the legislature to protect bondholders. We need to upgrade our infrastructure to allow external investors come into Ukraine and trade local bonds in local currency. Issuance of the hryvnia bonds externally demonstrate that we're still an exotic and moreover with toxic jurisdiction, and this is very bad. So we're still going to be paying premiums, and that's what we do. And there is no long-term strategy with this market for more than 5 years. It's going to build up in volume, and then it's going to crash. Yeah. Sorry, we've seen it. And the crash not maybe because of Ukraine, it's because of the general world cycles. Yeah. That's how it's happened. So we're still, as I like to say, we're still, on the banana ride on the beach.
Thank you.
And
Thank
that's very worrying. Thank you.
you. Another question, then I'll give the word to you. First, yes.
Alfred Braus, Ukrainian-Austrian Association and long-term manager, international industry. One thing concerning financing of Ukrainian companies, maybe as a side remark, there is a lot of money available. If I take, for example, EBRD, they can't spend the money they have because there are no transparent and no compliant projects. So one of the main things concerning IFIs would be to educate the Ukrainians to become compliant on one hand, so that means more trustworthy. On the other hand, to educate them in terms of intercultural management, in that they speak the same language as the country's funding should come from. And thirdly, to make them more professional, because a business plan under Ukrainian standards is not at all a bankable feasibility study under Ukrainian standards.
Thank you for your comment. Go ahead.
My name is Vitaly Manarovich. I'm an M&A associate from CMS Cameron McKenna. I think that my question would probably go to Brian Best, because Brian mentioned that Ukraine has too many state-owned enterprises, which means in fact that for Ukraine, privatization may be one of the good sources of capital, for example. And in view of this, what in your view the country lacks to avail of this source of capital and to have successful privatizations?
For me, it's a very simple answer. It's political will. There's no political will to privatize the state-owned enterprises, because those same state-owned enterprises are what provide the liquidity for the government officials to finance their campaigns, etc. So, on the one hand, you're taking away that source of cash flow from them in order to create a capital market. And I think that there's no political will for that yet. And that's unfortunate, but until that political will exists, I don't think that we will have a serious discussion about privatization in this country.
So we get two more questions, and then we'll be pretty much on time, I think. So two more questions. If not,
my name is Valentin Khokhlov. My question probably to Brian as well, and maybe to Timur. So Brian, you mentioned that mobilizing domestic savings is important, and one source of domestic savings would be retirement savings. But basically, since if we are working here in Ukraine, our labor income is 100% exposed to Ukrainian country risks. And the only sound portfolio management practice would be to diversify away these country-specific risks in our total portfolio. So we should put our retirement savings into asset classes with as low correlation to Ukrainian equity as possible. So how to solve this contradiction? We should invest our retirement savings outside of Ukraine, not in Ukraine. Thank you.
Well, I think my point was just the opposite. My point is that if you're able to mobilize those savings and you're able to invest them into Ukrainian assets with long maturities denominated in local currency, eventually what you should be doing is protecting yourself from those external financial shocks that we've felt on every single crisis that we've been through in this country. Because so much of our investment comes in the form of dollars. So we borrow in dollars, we invest in dollars, and when there's a currency shock, everybody suffers. So if we had a local capital market that gave people a local currency long-term asset to invest in, I think that it would protect the country from those external financial shocks that happen every so often. That was my point.
Yeah, I agree with Brian. Development of the local capital market is essential. Not many people will be able, even if we allow, or, actually nobody prevents them from investing abroad. But generally, not many people would have access to that, investment abroad. I mean, if we're building the capital market, we need to bring millions into this and make sure that this is a sustainable market. It's not that each one of you separately can invest abroad and buy real estate in London. It's about how we as a community can develop a transparent capital market and take advantage of the economic growth locally. If we all don't believe that there is capital, that this capital should be, invested and saved in Ukraine, well, what are we building it into? Why are we sitting here then? So I don't think it's a saying, is it locally or external? You need to be able to select your portfolio, investment portfolio, that will suit your investment and actually consumption needs in the future. So take your choice, but take it consciously and make sure and actually be sure that whom you're using as your investment advisor is reputable and responsible. And that I think is the choice. Thank you.
One last question. If not, I'll make one humble comment. Like we had 2 panel sessions and some speakers. They were all men. And CFA Institute has this program called Women in Investment Management. So we have to work on this diversity issue. And I've been to Ukraine a number of times, and I've seen very talented and strong women in finance. So maybe for next year, I think we should just a small remark. But thank you very much. It's been a pleasure discussing the capital markets and foreign investments and pensions with you. And now I give the word to our
returning to the diversity question, of course, it's unfortunate that we were not represented by female in our panels, but take a note that we had a female representative at Future of Finance Talks. That is twice a pleasure for me that we had it. So maybe she will be a winner. I don't know. It's up to your votes. In parallel to Brian's comments that he is hungry for investments, I'm sure that you are pretty much hungry for food. So we will have a very quick revote before the lunch, and we'll go to the lunch. Please take your voting devices. We will have the same question, which is, what would be the best course of action of authorities as regard to Ukrainian capital markets? And here is the results of the first voting, and let's quickly start the re-voting. I will ask organizers to start the voting now, please. Yes, please start. Okay, please cast your votes, take your devices, push the on button, choose your vote, and push the OK button, the green button. Okay, repeat several times, please, just to make sure we have the votes. Okay. Are we done? Yeah, looks much pretty same. Well, I must tell that you have changed. Yeah, you did your job. It's nice. So we now have the confidence more in our local markets. Okay. We'll take a note that we probably shall organize more such kind of events and invite you, and we will be happy to see you there. Okay. I would like to thank our panelists and Attila, who was a great moderator of this panel. And not taking more of your time, please, let's proceed to the lunch.